And today, with my colleague Paul Rickard still skiing in Europe, and don't think for one moment that I'm jealous about it, I thought I'd have a look at whether we should be optimistic about stocks in 2019. Now, with the Royal Commission having a positive effect on bank share prices and the overall stock market index, it's a pretty fair question to ask is, can this positivity be sustained? Now, the big issues ahead obviously start off with reporting season, which we've now started to look at, and the CBA has done better than expected. And it's really important when bellwether companies like the big banks do well. It can actually provide a foundation underneath our stock market generally. So let's look at reporting season and a number of other issues that I think will determine whether 2019 is going to be a good year for stocks. Let me list them for you. Number one, as I've already said, reporting season will be important. Then you've got the Royal Commission, which hasn't been as punishing as we expected. That's been good for bank share prices, and that should be good for stocks. US economic growth, that's an important issue to consider for stocks going forward. You've got the third year of a US presidency. You've got the Trump trade deal, which clearly is going to be very important as a next leg up for the stock market. You've got the fact that Donald Trump can't afford to see a recession or a stock market crash in the next year and a half or so. And my favourite bear market indicator is giving me a lot more optimism than I might have thought before Christmas. On reporting season, I'm pretty happy that the confession season hasn't shown a lot of really well-known and important companies having to fess up for some pretty bad performances. We're going to have to watch the outlook statements because that will have a very big impact on stock prices, but generally speaking, I'm not worried that reporting season is going to be a big negative with worse than expected results across the board. Number two, the Royal Commission recommendations had a real potential to drive our stock market down further. The opposite has happened, and the fact that we've got upward momentum with a number of other positives which I think will click in over the course of 2019, the Royal Commission generally hasn't proved to be a negative for stocks going forward. Number three, US economic growth. Now, one of the biggest concerns when the stock market was selling off between September and December of last year was that the Fed will be raising interest rates quicker and more extensively than the market wanted it to do. It then built in an expectation that US economic growth would be a lot slower than was predicted, say, 12 months ago. Now, we've seen that the Fed is basically coming out and saying, we will be patient on interest rate rises. That's going to be good for US economic growth. And the latest jobs number coming out of the US, 304,000 jobs were created in January compared to the 170,000 that were predicted. This economy is not slowing down yet, and it's not really showing the inflation that would mean that the Fed will have to raise interest rates and slow the economy down. I think the US economy will surprise on the high side, and that will underpin a reasonable year for Wall Street, and that will help stock markets right around the world, including here in Australia. Number four, the third year of a US presidency. If you look at the information in the Traders Almanac, you see that the third year of a US president, it's the best year for the stock market. And I think that's a really good omen considering how bad the second year was, 2018. And second years historically are bad for US presidents. So in a sense, his history is working in our favour. And I think this particular president really needs things to happen in 2019. Number five, the trade war. Donald Trump versus China. And of course, February is the critical month. By the end of this month, we should have an idea of whether Donald Trump has cracked the deal with his Chinese counterparts. And the kind of language coming out of the White House is generally positive. Wall Street is reacting positive to the messages coming out of the White House. And so I suspect we are going to see a reasonable deal cracked over the course of February. And that will be another leg up following the great leg up following the Royal Commission. So I think the trade deal and China are going to be critically important. If they don't come off, a lot of my optimism will be hosed down. But at this point in time, I think the trade deal will be pulled off and stocks will benefit from it. Number six, on the important subject of Donald Trump, and he knows he can't have a recession and a stock market crash before November 2020. This president is the most sensitive to the stock market in modern history. He apparently has televisions in the Oval Office watching what the market's doing, reacting to many of his policies and many of his tweets. So I think that he knows he has to get a trade deal up. He knows he has to sort out the government shutdown. He knows he has to appease Wall Street. And I think that's going to be a very, very positive force to help stocks go up over 2019. And number 7, my favourite bear market indicator. This comes from the research team in the USA for Citi. And they've been watching all the key indications that tell them whether they should be positive or negative on stocks. Now, in this bear market indicator list, there are 18 potential red flags. Issues that say, beware, you should be getting out of stocks. Now, this time last year, 3.5 out of 18 were saying you should be scared. Now, a 3.5 number out of 18 is really small. Before the dot-com crash, 17.5 of these red flags were waving out of 18. For the GFC, it was 12 to 13. And remember, some of those indications were affected by the fact that debt rating agencies didn't accurately talk about the risk for the banking system in connection to CDOs linked to pretty hopeless and scary ninja loans in the USA. So that 12 to 13 is usually a time when you might get a little bit worried about the stock market. And of course, it proved to be a time to be worried. But now, right now, the number is still 3.5 out of 18. And on that basis, it makes me less worried that the US stock market and the US economy is setting itself up for a bear market in 2019. So they are the 7 factors that are making me optimistic about stocks. Clearly over 2019, if some of these positive indications that I think are working in my favour, supporting my argument that stocks should go up, if they change, I'll clearly change my point of view. And I suspect that the number of red flags on Citi's list of 18 will start growing as well. But at this point in time, as you can see, there's a pretty good case for you being positive about stocks in 2019.